Hey, what's up everyone? This is Andrew, your host, and I'll be taking you on a journey through all of the business news of the week. So let's get started. To start off with, we have a little bit of a different kind of interesting story here in the comic book world. Very interesting. Kickstarter. So Keanu Reeves came out with his own comic book, right? And basically it was kind of a crossover where he's bringing in some members of the comic book kind of community to do the art and the lettering and everything, but he's going to be assisting with the story. It tells the story of this hero that's kind of a blessing and a curse of being immortal. And he does all these deeds for the government to get the government to tell him why he's immortal and how he could become no longer immortal. And the problem with that is that, he has to do all those terrible things, and then it's the kind of the moral aspect of that. And it's something that Keanu Reeves wanted to write into his story. This Kickstarter raised $1.477 million for a comic book. So I think this actually might be the record for a comic book Kickstarter program. So that's pretty crazy. The actual comic is going to be called Berserker, but it's kind of spelled weird like comic book style. And the main character is Keanu Reeves. Keanu Reeves from Bill and Ted's Excellent Adventure. You had Speed, you had The Matrix. I guess all it took was a giant Hollywood actor to come into the comic book world to kind of blow things up. So now, basically, it's going to be available in retail. So if you didn't get it on the Kickstarter, you're still good. You can still pick it up at your local comic book shop, at Barnes & Noble, or retail outlet when it does come out. So that was a pretty interesting story where you see something that's taken a different approach in an industry that was kind of faltering. And it looks like the Kickstarter was very successful there. They were only supposed to raise $50,000 and they raised $1.47 million. So I'd say that's pretty successful. Next up, we have the IRS coming out with new rules for people that are involved with cryptocurrencies. So this was something where the IRS kind of puts a question on the 1040 tax form to basically catch people that are doing something that would be kind of going around the laws, like putting offshore accounts. That was the initial first question that they used was, do you have an offshore account or have you used one? And people have to check yes or no. And then when they go to court and they were hiding money in Switzerland or the Virgin Islands, Bermuda or something, you can find out that they checked on the box, no, I don't have offshore accounts. And the IRS could say they can't plead ignorance on this and really nail them for the fine or for the imprisonment that they want to get through on that trial. So now what they're going to be actually putting on there is that at any time during 2020, did you sell, did you buy, did you exchange any type of virtual currency? So if you had any way that you acquired an interest in a virtual currency, you now have to tell the IRS that by checking off a box, yes or no. And at first glance, it might not seem like this is a big deal, but the reality is that I think it was in 2015, they made a rule that cryptocurrency is deemed property, not a currency, even though it's called cryptocurrency. And that means it's taxed differently. And here's where the issue comes in. Let's say you want to buy an iPad online. So you use Bitcoin or you use Ethereum or you use Monero, you use some kind of cryptocurrency and you buy this. Well, the actual profit that you had from when you first bought Bitcoin at, $100 or something like that, and then now it's 10,000, you have to pay the capital gains tax even though you were exchanging that Bitcoin for an iPad. So if that's not confusing, then everything with the tax laws is confusing. But basically the idea is that even if you buy something, you then have to pay the tax on the capital gain that you made on your cryptocurrency. And now there's a way for them to catch people like that and get their fair share of the taxes. So now another tax issue we're going over to the European Union now. So the European Union was going over one of the major American companies, Apple. And they basically said that, Apple was getting unfair tax privileges from a member of the EU state, which is Ireland. So Ireland was going and in the claim, it's that the EU has a set standards that nobody's supposed to get special tax breaks, right? And they're claiming Apple got these special tax breaks, while Ireland is claiming, no, they give the same tax structure to everybody that operates out of Ireland. And there's been this big lawsuit for $15.2 billion that the European Union wants in back taxes. So since the case has been going on since 2016, and Apple already won once and then was appealed again, The total is now $16.7 billion, which is being held in escrow until this final trial is over. So we're talking a big amount of money here. And, Apple, once again, they claim that the rules that apply to them apply to every other business that operates out of Ireland, so there's no unfair advantage there, and that they shouldn't be singled out for this type of, attack. And looking at it from a different perspective, it seems like a bit of a witch hunt, right? There's a bunch of profits there that kind of the government or the organization that's in charge there can see that they can get a piece of that. They want a piece of the pie, so they're going to go after it, whether it's right or wrong. And a new thing now is called digital taxation for any company that operates online. There was a tax of 3% was instituted in France on all revenues derived from online sources in which French users play a major role. So that's one country in the European Union that is really going after these companies that make all their money online and don't necessarily have like a storefront or something in the country or a warehouse where they make the revenue. And this is a way to bring in additional tax revenue. But it seems like a witch hunt because, they're going after these areas that were never really taxed in the same way before. In the United States, you had a big case with Wayfair, and now all people that order items online, you might end up seeing that huge sales tax that they charge now on a lot of these products. And that's because of this Wayfair trial that went through. And it was basically, I think it was Wayfair in South Dakota. And it was if you had a warehouse in the state or if you had your distribution center there, then you would be charged the sales tax. If you were, in South Dakota and you purchased something and it came from the warehouse there, okay, that's a sales tax. But if the warehouse was in another state like I don't know, Maryland, and it was shipped to North or South Dakota, you wouldn't have to pay that sales tax. Since that case said, no, from now on, you always have to pay the tax online, now you're seeing companies like eBay and every other online seller basically imposing that tax on consumers. And that's a huge amount. I mean, some of these sales taxes between 2 and 10%. So you're adding that to the purchase of every digital good. And that's a lot of revenue that now these states are able to bring in from that. All right, so that's enough about taxes for now. But I'd like to also go over to something that I saw that's, it's part business because it's the world's, second, third largest economy? Well, they're going to be the first one eventually, right? Just a matter of getting to the top here. But China. So China had their leader Xi Jinping come out and he declared success in his system of governing the region of Xinjiang. So Xi Jinping said, now listen to this carefully because it's kind of crazy. Practice has proven that the party's strategy for governing Xinjiang in the new era is completely correct. So what is that new policy that they've been using there, right? Well, they're basically doing a cultural assimilation of all of the people that were there that are, it's pronounced the Uyghur Muslims, is the ethnic minority from that area. And there's actually 12 million of these Muslim individuals that are there that are being ostracized by the Chinese government. And then now you have them saying, what we're doing is correct. And they said they're not, they're making their lives better. Well, I guess by making their lives better, they were doing some crazy things here. They were trying to wipe out their entire culture. And they're doing this by, blanket digital surveillance, mass internment camps, political indoctrination programs, and the destruction of religious buildings. So I guess if that's a success, the Chinese Communist government's getting what they want out of it. Never mind all the human rights issues, which, by the way, Chinese officials denied going against any rights abuses or anything like that. So they say what they're doing is fine. Now, the Australian Strategic Policy Institute published reports showing that the Chinese have destroyed or damaged 2/3 of the religious sites and mosques in that area, in Xinjiang. And this is to destroy all of the evidence that this culture even existed is basically what they're trying to do after they've come out and said, no, we're not, destroying the buildings or the religious sites or anything like that. And the indoctrination camps, they said, no, we're getting rid of those people, graduated from them, we no longer have them anymore. The Australian report said that they've actually turned into mass detention camps. And we heard previous reports in other years where they were literally taking this ethnic minority, having the people's organs harvested and sold on the black market. So this is some crazy stuff going on here that you probably won't hear in a lot of other areas. But I thought it's interesting because you see the different styles of governance around the world. We're talking about the European Union. We're talking about the Communist Chinese government here. We're talking about the United States with tax laws. I mean, there's a lot of things that governments and societies do around the world that are different. Some are good, some are bad, and it's for you to decide, what is the correct route there. So since I like jumping all over the world here, we're going to jump over to South Korea. So South Korea just had a giant IPO, and it was for the company that manages BTS. There's like a huge K-pop singing group. And what they do is this company has all the marketing. They have a bunch of bands, but like BTS is the main one because BTS right now is breaking all the records. So their song Dynamite, they had 100 million downloads in 24 hours. So they beat a record for that. They sold out stadiums in Madison Square Garden and Citi Field for their concerts. And they're in the Guinness World Record book for most views of a concert live stream with 756,000 people watching in a moment. So that's pretty crazy. So naturally the hype was real for this IPO. So the management company is called Big Hit Entertainment because that's all they do is make big hits. And now they were going to raise approximately, I think it was, see if I have here. Well, it was 135,000 South Korean won, approximately $115 a piece for the shares. And it was at the top end of their price range. So as soon as this came out, the stock price popped on the news and it started going up. There's been a lot of demand for these IPOs lately in South Korea. So they raised about $820 million through this offering, and the stock was actually 1,117 times oversubscribed by institutional investors. So that's pretty crazy. It's just like everybody wanted a piece of this company. And it makes sense when their largest band here, BTS, is just breaking every world record there is. So entertainment stocks in South Korea, not just Big Hit Entertainment, but all the other ones also rallied on the news of this IPO and how successful it was. So you had YG Entertainment and you had JYP Entertainment. YG was up 11.98% and JYP Entertainment was up 9.94%. SM Entertainment jumped more than 6.69%. So you can see how this kind of, when you get all this media attention for this big IPO in a specific sector or industry, it kind of goes out to all of the other ones as well in that industry or sector. People like to get excited about these things. And in South Korea, they've also had a lot of stimulus bills and a lot of money floating around, just like we've had in the United States. So you're seeing money flowing into the IPO and the stock market there. Recently, you had a video game publisher called Kakao Games, and they saw a blockbuster debut as well. It went up 30% on their first day of trading. So it's not just the, BTS stock that's doing well. It's a lot of other ones. It's not Big Hit Entertainment. It's just everything in their stock market is going up, kind of like here, what we've seen since the pandemic, and everything started skyrocketing after the March lows. So I thought that was pretty interesting news. Now jump back over to the American front here and let's see what's going on in the States. We had a big announcement from a major company, a lot of theme parks around the country, Disney. So Disney came out and they said they will be laying off about 20,000 workers at their theme parks, cruise ships, and retail outlets. Now, originally people were thinking that Disney, they dodged a bullet with the virus, they get by and they're fine. They opened up some of their theme parks, the Disney World, Disneyland, a little bit at certain percent capacity, but it just wasn't enough. You can't keep all these employees operating when you're working at 25% capacity or less. So they specifically called out California, saying California exacerbated in California by the state's unwillingness to lift restrictions that would allow Disneyland to reopen. So Disneyland there was closed. The one in Florida tried to open with limited capacity. So now we're having these big cuts, and 67% of the workers that are being laid off are part-time. So at least it's not necessarily the full-time workers, but it's still sad to hear this. But this is the situation that we live in today. Now let's jump over to a French company called LVMH. So you might not have heard of LVMH, but you've probably heard of Louis Vuitton and Hennessy, which are the companies, their major brands. It's a French luxury group that owns a whole bunch of these kind of, like luxury handbags and clothing and jewelry and all that type of stuff. So they were trying to buy the American company Tiffany, which has all the jewelry stores all over the place. Well, the problem is that after the pandemic and with people not doing weddings as much and not buying as much jewelry, well, Tiffany's been having a lot of trouble. It was supposed to be a $16 billion takeover of Tiffany, and then they kind of stalled and they delayed, and Tiffany started suing LVMH, saying that you guys were holding off on this because of the tariff situation and that you didn't want to buy us out and you're kind of prolonging this deal that was supposed to be executed already. Well, LVMH didn't like that they were getting sued by Tiffany and they countersued, which seems to be the case with all these big companies now. Same thing with Apple getting sued by Epic Games. They're countersuing. So now you have LVMH come out and they said specifically about Tiffany is a mismanaged business that over the first half of 2020 hemorrhaged cash for the first time in a quarter century with no end to its problems in sight. So that is just a brutal synopsis of what they believe the business condition of Tiffany is. And then Tiffany, again, was saying that LVMH just delayed because of the tariffs, and now they're using this pandemic as an excuse not to do the deal. But the real issue was before that. So we're going to have to see what the courts decide on that one. Man, there's a lot of stuff about courts and public actions like that this week, but another one with this is that Uber in London. So Uber had been banned from London because their license was revoked. They found out a bunch of people were kind of using the app that weren't actually licensed by Uber, and they were just kind of using it and picking up people, and there was some crimes that were committed there. So now there was a big appeal decision in the UK, in the UK courts, and Uber won this case, and they'll be permitted once again to operate in London, which is one of the largest international markets for this type of taxi service. And this is a huge win for them, and we'll see if it holds out, if they find kind of another reason to be able to ban them. A lot of places, even in America, I think in some major cities like in, Austin or Chicago, there was some cities in the United States that also banned Uber or Lyft from operating. I think it was also in California, they tried to impose an additional tax on it or force them to pay a certain wage to the workers. So these companies that are kind of ride-sharing companies are having a lot of different issues from different angles coming at them, both legal and, on the wage side and on the litigation side. So a lot of different things hitting them. This was a big win for Uber. Speaking of vehicles, we had that ban in California that they want to do by 2035, ban all gas-powered vehicles, only electric vehicles on the roads. Zero emissions would be great for the economy, great for the world, great for the air. The problem is that the EPA actually came out and said, you know what, this may be both impractical and illegal. I don't know if you can do this. So the EPA came out and said that California is already to be, they're known to have blackouts already. And if they want to take all of the fleet of cars in California with, 50 million of people and try and convert that all to electric vehicles, the infrastructure isn't there to actually supply all of the power needed to power the electric vehicles. So if they have blackouts already, imagine all of that coming into, the next few years where they have to power all of those electric vehicles. So some interesting points that the EPA pointed out there, and we're going to see if this law actually holds up or if it's shot down or what actually ends up happening with it. So I mentioned this a little bit earlier, but Apple and Epic, they had their big lawsuit, their counter lawsuit. Epic Games found a way that they can charge in the app for a purchase and eliminate the App Store charge of 30% that the Apple App Store gets every time you purchase an app or make an in-app purchase. So this was a big deal to Apple because that's a major portion of their revenue. And it's not just Apple that does this. Pretty much every app store that you have on mobile devices does this in some way or another. The Google one, Android one, it has the same amount of 30% surcharge on all these items. So Epic sued. And then you also heard a lot of companies either backing Epic Games like Spotify, or you had other companies voicing their concerns. So, it was Facebook, Spotify, and Match Group all kind of sided with what Epic Games was saying, is that it's unfair business practices for Apple to charge 30% for all of the items that are being sold on the App Store like that. So Apple says they can issue their software through other channels if they don't want to use their app store that has billions of users around the world. And they say it's not illegal. So we'll have to see what the court decides on this. The judge actually said that this was a pretty incredible story here, and he doesn't know offhand, who's right or wrong, and he's kind of happy to go see the trial of what's going to happen with this, which means this is up for an epic showdown here, and it could possibly change our entire economy around mobile phones, because Apple is trying to go into a a major business kind of revenue contributor, having the software and the apps contributing to their bottom line. And now if you're going to take that away from them, they have to find some other way to make that revenue, and it's going to change the whole business model. So we have to see what would happen from that. Recently, they made $15 billion in a year from the App Store. So it's not small change. Now, what if they did just suddenly say you can't charge 30% in the App Store, you don't get your commission whenever somebody sells a product? Well, some people are saying that they're going to have to include that kind of price into the phones when they're selling to consumers, because they're going to make it up somewhere. And probably the end result is the people that would be hurt by this would be the end consumers that, of course, have to pay an additional fee somewhere. Another thing is, how many games that came out where they were made by some kid in a basement somewhere programming, and he throws up on his game on the App Store, or his program, his productivity app, or a news app, anything? How many of those are not going to happen anymore? What's going to happen to the innovation when suddenly there's a charge or something like that, just when you want to put your product on the App Store, because they can't get that 30% on the back end anymore? So it would be interesting to see not just what happens with this trial, but how it affects that economy and what direction it takes from here. So that's big tailwinds from that one. Going over now to JP Morgan, one of the largest banks in the United States. So what did they do? Well, they were making some shady deals again, which, I mean, it seems to happen a lot with the banks. Remember all the news about Wells Fargo and even JP Morgan with the big whale that happened back in the day in England. So now what they did was they admitted to misconduct tied to manipulation of the precious metals and treasury markets. So they literally said that they were manipulating markets for their own benefit, and they agreed to a fine of $920 million. So I guess they kind of just admit to making a mistake here and doing something wrong, and everything's okay. They pay a big fine and they just go on as business as usual, which kind of seems like they get off easy. I mean, it didn't even affect the share price that much. But if you look at the amount of the fine, it's actually the largest fine paid by a company in the US for spoofing. So what is spoofing? Spoofing is basically when a person or company, they pretend to be another person or organization in a transaction for the benefit of themselves. By falsifying data, they can pretend to be somebody else. And in algorithmic trading, algorithms are used to make it look like a big organization has interest in a particular stock or commodity or treasury bond. And you can either say, like, you can make it look like there's a bunch of people trying to buy or sell and drive the price of the underlying commodity or asset. And then you can profit on the other side of that. So what they were actually doing here, traders from JP Morgan placed orders that they never intended to actually execute. But once they went in the system, and the other programs, the other algorithms, the high frequency trading was able to see that, hey, there's a lot of buy orders coming in for precious, for gold right now. There's a lot of sell orders coming in. They can take the other side of that trade and then cancel those original orders. They never have them executed, and everybody else starts following the original orders, and they take the opposite trade and make as much money as they possibly can with that. So I wonder, I mean, they must have made more than $920 million if they can just pay this fine no problem by settling like that. So it seems like they get off easy, and I don't see how this is going to be stopped in the future, but at least they were caught here and something was done about it. So we had a surprise in the American business environment when we had a lot of business applications for new businesses being applied for. So we thought this pandemic would shut everybody down. Nobody would be doing anything in business. That's what happens in a normal recession. But just like everything else with this pandemic, it's an anomaly. Everything is different here. So now the census data, that comes out on October 14th, but it reported a total of 190,000 business applications for the week ending September 19th. So that's a 45.1% year over year increase in the amount of business applications. A lot of people are going into kind of self-employed jobs, doing their own thing. They realized, they got laid off, or they are breaking away from their company with remote work and are realizing they can do things on their own and are starting these businesses. A lot of people trying to do online businesses now that everybody's stuck at home and ordering online. So if you look back at the second quarter data, total business application Applications reached an all-time high of 883,174 applications in the second quarter. So, I mean, this is right around the time when all this stuff started happening. It's pretty crazy to see that. So that's on a positive side there. It's always good to see new businesses forming. You know, when are we going to see the next Apple or Microsoft or, you know, GM? Next up, we have retail bankruptcies. 29 retailers filed for bankruptcy so far this year. So in 2019, there was only 17 that filed for bankruptcy, and now we had 29. Once again, a huge jump. This is according to a BDO report. So in 2010, that was the year when we had the most retail bankruptcies ever recorded before. And in that year, it was 48 in 1 year. Now we're at 29. The problem is we're not done with the year here. We're actually on pace to potentially beat that record made in 2010 of 48. So unless things start getting better for retail, they're really going to get hit here, and we might see them break the 2010 record for the worst year for retail bankruptcies. Right now, the worst 2 months were May and July. So that is an indication that hopefully it's getting a little better in August, September, October, but we have to see the final numbers here. A lot of companies are actually reporting their earnings, and at the same time, you know, during earnings season, we have their earnings report, but then they follow it up with, oh, and now we're going to do these layoffs and lay off these workers because the numbers become real when you report the earnings. So Shell, the oil company, announced it will be laying off 9,000 workers. That's 10% of their workforce. Marathon Petroleum announced they will cut 12%. That's 2,050 jobs right there. They're also taking a $175 million charge for restructuring. Goldman Sachs, even Goldman Sachs, this seemingly untouchable investment bank, will be doing some layoffs, about 400 people or 1% of their workforce. And then the big ones, American Airlines and United Airlines announced that together they will be cutting about 32,000 employees. These were employees that were already furloughed, but now they are being released. And this is because they basically said they didn't get enough money from the government to continue their operations. Originally in March, Congress passed a payroll support bill of $25 billion. And part of that was that they would give money to the airlines to keep paying employees so they wouldn't have to lay them off. And if you look at the ruling, they had until October 1st. They were not allowed to lay off workers if they wanted to take that $25 billion. So naturally they took that, and now that it's run out, we're at October 1st, they didn't get another stimulus bill. They won another $25 billion. So I don't know if we would just give $25 billion every few months, like indefinitely, to the airlines to keep them going, or if they could find some other way to maybe do business in this environment. But that's a crazy occurrence. There's a lot of people that are going to be unemployed from that. So from that news, let's switch it around and go to some more upbringing news, right? We have a new app here that's actually called Rally Road. Well, it's Rally RD period. You can find it on your mobile phones. And it's a new software application that basically just lets people invest in alternate investments. So I really find this interesting. It's always awesome to give people another opportunity to go and make investments and build a future and kind of do different things that are innovative and something that you couldn't do before. Back in the day when they first had the brokerage houses and they were able to have online trades and make everybody able to invest in the stock market instead of just the elite few. So now we're seeing these apps making kind of collectibles and unique item trading and purchasing possible. I mean, we can see a revolution in this industry. We talked about the comic books before. This could also be like baseball cards, and you can have, you know, very historic, like the Mickey Mantle cards and Babe Ruth cards and stuff like that. You could have the NBA cards. You could have whiskey and wine and coins. You can have all types of collectibles on this platform. They launched in 2017 and have now had like up to 200,000 users sign up for an account. You have to sign up for an account to utilize the service. Well, they just raised $17 million in new funding from venture capital. I wish I had venture capital so I could invest in stuff like this. It would be a lot of fun. So basically there's two ways that people can invest in this type of product, right? You can buy shares of, let's say you have a card. You have 100 shares of that card, and every 90 days there's like a period where it's like an IPO. You have the IPO, you can buy shares of that card, and then you have to wait 90 days and you can either buy more or get rid of what you have. It's kind of like fractional shares in a normal stock market company, right? There's some some different software applications you can utilize for that if you want fractional shares. I don't really like the idea of fractional shares. It's kind of shady. Also, you have to worry about the actual card being destroyed or stolen or something happening to that, or fraud, because there was another company like this that did have fraud and they weren't actually holding on to the items. They were selling them as well. So you have to really look into that. The other option is that you can use this as a system like eBay or an online platform like Craigslist or something where you can actually purchase these collectible items. You know, there's a lot of wine places to buy expensive wines online. It's the same thing as that. You can use this as kind of a venue for that. And the thing is, all the younger generations now are using apps like Robinhood and Webull to invest their money into, I mean, apparently a lot of people are going into day trading now, which is not great, but I guess that's what happens when you have kids that want to make a quick buck. But hopefully they're going to realize the idea of investing for the long term and not just be speculating and kind of doing day trading. You can purchase the items on here as well. So that's great that there's a new app that's doing things that didn't happen before. You know, when Charles Schwab, I think, was the first one to do the online brokerages, and now, you know, Charles Schwab changed their commissions to 0. And now you have like all these other companies come out and it's charging $0 for trades. So now everybody can day trade all they want because there's no commissions. That was something that, you know, 10 years ago was unheard of. And then 10 or 20 years before that, I mean, you only had people, really rich people, doing trades because it costs so much. So just look at how the prices come down with innovation. It's a great thing to see in an economy. So we had some big news recently with the president actually contracting COVID-19. So what happened was, I mean, you had big events, you have people without masks on, you have the virus kind of being spread like that. And what's interesting about this one, I was looking at how many world leaders were actually infected with COVID-19. There's about 16 that are, you know, presidents, vice presidents. Some major ones included Boris Johnson from the United Kingdom. You have the president of Brazil, you had Monaco, you had Prince Albert II of Monaco was infected. So yeah, 16 countries had this affect top leadership in their country. It's pretty crazy what's going on with that. And we'll see how that ends up panning out here. So going over to Goldman Sachs, the investment bank. So they made a deal, I think it was 2015 or 2016, a couple of years ago, they made a deal for the Apple Card, right? They're trying to get into consumer banking. It's always been an investment bank for elite professionals, you know, high net worth individuals, and now they're going into the broader market. So now what they're doing is they're buying GM's credit card business for $2.5 million, and they're getting further into this lending to the everyday consumer instead of the high net worth individuals. So I find it interesting to see that they're taking this different business approach. We also had a report from PepsiCo that their revenue was up 5.3%. So originally, people were thinking, you know, PepsiCo has a lot of the drinks, but they're also a major snack company. People weren't sure how they were going to fare during this pandemic. Now we're starting to see it tick up again. A lot of demand for its snacks and packaged foods, and beverage business actually just started making a rebound. So from there, I just want to go into kind of the unemployment numbers that I usually give an update on. We had 837,000 workers filed for unemployment last week. Again, we're running around that 840,000 level. 12 million people currently unemployed with that. But the big thing here, personal income fell 2.7% in August. That is the amount that people receive from salaries, their investments, and income. So that's not good when you're seeing your average income going down. That's pretty bad. That's what happens in a recession potentially. So the US actually added 661,000 jobs in the month of September. But from what I just said before, we lost 800,000 plus jobs in 1 week just recently, and not to mention the past 4 or 5 weeks. So that came as a disappointment to expectations for September. The revised total for August was 1.49 million jobs with a 7.9% unemployment rate. So we're seeing some job creation here, but we're not seeing it on the scale that we're seeing people filing for unemployment. It is still way skewed towards getting worse into the unemployment picture here. Another factor in this is the labor force participation rate, which was released. So this is kind of long-term unemployment and what's going on with that. So it fell to 61.4% from 61.7%. The overall economy is down to 10.7 million jobs. It's down 10.7 million jobs from its February peak. We have that many less jobs, 10.7 million less jobs than we had in February right now. So you can see all those weeks of all those unemployment coming out. This is what the result is. All right, so separately from all of that news, we have Google announced a new product feature for their Google News Showcase. They stated they will pay publishers more than $1 billion over the next 3 years to license new news content for this new product. So it's a great way for them to actually give back to the news community versus having everything free online with ads and, having that kind of structure to it. Amazon came out and they announced that 19,000 of their workers tested positive for COVID-19. So, of course, that's terrible news that anybody tests positive. But when you see this from this perspective, they have about 798,000 employees right now. So that is about 2.4% of the company that contracted the virus. So it's not crazy high, but you can see how it is with all those distribution centers going, with all of the packages flying around the country right now during the pandemic. A company called Marathon Oil decided that they were actually going to raise their dividend. Actually, they brought the dividend back. It was actually canceled because the price of oil crashed with the pandemic and nobody traveling. They brought it back at 3 cents a share. But is this a good thing? I mean, does this mean that oil has finally bottomed out for these crisis levels and it's not going to crash any farther? Right now, oil's about $37, 37 cents a barrel. But then, I was taking a closer look at this, and should this company really be doing this? I understand they want to do a vote of confidence and actually start issuing their dividend again, which they stopped before. But now it's like this company's only worth a couple dollars a share. It's a penny stock. Should they really be focusing on the dividend instead of just reshoring up their business and making it more profitable? Why just give this dividend for 3 cents a share for, I don't know. You can decide on that one. Now, we talked about how the president got COVID-19, and naturally he had, his 20 doctors that were looking at him and trying to see what options they had, what they could do. Turns out they went with Regeneron to use a experimental coronavirus antibody cocktail to give the president. And this basically, it was a lot of news for Regeneron, which, when you have the president of the United States who's supposed to be getting the best care that you can get in the country, using this new drug, which is experimental, which is kind of separate from that. Regeneron was up about $19.20 or about 3.4% after hours just on this news. If the president does well and has a good recovery, this is going to be great marketing for Regeneron on this new product that they have. On top of that, people were they were arguing about how come the president has his own type of care, like rich people have their own type of care. This experimental drug can be used no problem on him, but if I got sick, can I use this experimental drug? Well, no, because it's not FDA approved. So there was some conflict there about that. But overall for Regeneron, this is good news. An IPO that happened in the United States would be Palantir Technologies. So this was a big company that had a direct listing at $10 a share, and they raised $21 billion in the US markets. So the company builds and deploys software platforms for the intelligence community in the United States to assist in counterterrorism and investigations and operations. So they provide this Palantir Gotham and Palantir Foundry software, and they analyze kind of patterns in their data sets to find, what's going to be a potential threat and how they can respond to those. And it was a big thing here, was co-founded by Peter Thiel. So they listed their shares on a direct list instead of going through an investment bank. So normally an investment bank would actually give the company a certain amount of money for the IPO, and then they would list it on the exchange. And whether the price went up or down, the investment bank would make the money, but the company was guaranteed that money that they got from the investment bank. That's the traditional style IPO. This direct listing was basically, they just list it on the exchange, and employees and other shareholders can sell the stock, and they can basically do all this without issuing new shares and raising capital. So I think there was a few other companies that did this. It was Slack and Spotify. They both did this, and they both went up on their first day of trading, like this stock. So it was pretty interesting to see that one, and we'll see how that plays out in the future, but another big IPO there. We had an announcement from Starbucks that they are raising their quarterly dividend from 0.41 cents to 0.45 cents a share. So this is big because Starbucks has tried to start reopening stores, And now that they've been able to increase their dividend a little bit, it means it's a vote of confidence in the business operations. I guess the reopenings have been working for them. Not so good news for the cruise industry. The CDC actually came out with new guidelines and said they are banning cruise ship sailing through October 31st. So through the end of the month, they're going to be banning cruise ships from sailing. And this is terrible news there's a Carnival Cruise Lines, the major one. Then you have Royal Caribbean Cruise Lines. And then you have Norwegian Cruise Lines. All got beat up on this news because they want to start getting their ships in some capacity moving so that they can start earning an income again. If you look at the previous weeks, we have some good information there on Carnival Cruise Lines in particular, and just all the kind of the problems they have with the structuring of their debt and being able to have enough money to survive here. So this ban, that really hits them hard. Speaking of kind of like new government rules and everything like that, there's still stimulus talk right now of a new bill for $2.2 trillion that might be passed, and it might be giving basically cash checks to individuals such as yourself. And we'll have to see if that actually plays out. There's been a lot of problems with how much the stimulus should be, even if we should have a stimulus. So we don't know if it's ever going to get passed, especially around this election time. It's kind of crazy. But if this does get passed, this will be the 5th economic stimulus bill since the pandemic started that's going to be enacted. So that's pretty crazy that you would think, if it's a stimulus and it's supposed to get the economy back to where it's supposed to be, one stimulus bill is not enough. I mean, you need 5. Do you need 10? Do you need 20? When does it end? And what's the end goal of this, right? Because all this debt that's being piled on eventually has to be paid back by someone, or it has to be paid interest on the debt. I mean, there's ramifications for this. So we have to see how that plays out. And if you want to piss off your customers, this one company I want to talk about now found a great way to do that. So people are sitting there watching their TV. All of a sudden, this thing pops up on the bottom of the screen. Turns out it's an ad for some product on their Samsung TV. So a lot of people went online to forums and they were asking, what the heck is this? What's going on here? Why am I getting ads on the user interface of the TV? Not even in your app, or it's not like you're on Hulu or something and you have an app that pops up. It's literally on the TV itself. So it turns out, now Samsung had gotten in trouble for this before, but they started these ads through the TV UI in 2016. But now they're becoming larger and more intrusive, and they're becoming more and more customer complaints. So I wanted to talk about this a bit. Now, if you look at Samsung's business website, it explains that they have one of the industry's largest selection of automatic content recognition. So what does that mean? That means anything you're doing on the TV, their software is analyzing that and can tell, are you watching a movie? Are you watching a show? What type of show is it? What type of product's on there? Are you playing a video game? What are your interests? And they're basically making an ad profile on you based on what's going on the TV. I mean, that's pretty crazy. That seems even crazier than what Facebook, that is what Facebook does, is basically create an entire ad profile on you. And if you use your TV a lot, that's a lot of information that this company can get. So now that they're tracking everything you do, that's a great way for them to market and sell you products. But people are very upset about this because they buy a $500 to several $1,000 TV and don't realize it's going to start popping ads at them. So they also had Samsung got in trouble in 2015 because they went and they had their microphones being turned on, always on the TVs and recording information. So if you want to tell your TV to turn on, that's a good thing. But the problem is that we found out in government leaks, like the NSA and everything was using this information and harvesting this data. And also Samsung is recording these conversations, and they say, if you have any private information, don't yell out your password or something there, or your bank account statement out in the open, which is in front of their TV, because it has the microphone always on, and it records it and could potentially store it on their servers. So that was another thing that Samsung came out about. So we're seeing that it seems like they're trying to get into kind of a new business line instead of just selling the hardware, and instead selling ad profiles and ads to different companies. So that would be a huge business model for them. They could basically turn into a Facebook style business here. But for consumers, keep filing those complaints so we don't have to get ads on our TVs. Who knows what other companies are going to start doing this, but we get enough ads everywhere else. All right, so moving on to one of the largest, actually, do you know what the top drink is in the world besides water? It's actually tea. So tea around the world is the #1 beverage besides water. And it's bad news for consumers because the price has been going up for tea right now. So right now you're having a combination of coronavirus and COVID-19 affecting the harvest in all the major areas. And then you have bad weather in the main areas it was grown. So the main areas it was grown was Kenya, China, Sri Lanka, and India. So if you grow all the tea there and those areas have bad weather, it's affecting the total world price now. So before the crisis, it was about $2.50 a kilogram. Now it has jumped to $3.50 a kilogram. So that might not seem a lot because it's, low dollar values, but the low nominal value, right? But then if you look at the percentage increase, that's actually a 47% increase in less than a year. That's a huge jump in the price of tea. So not a great thing there, but you can see how the world weather and the world, is reacting to this coronavirus and how it affects different aspects of the economy. I mean, now when you go to get tea to drink, it's going to be affected by this. Kind of crazy there. But I just like seeing that kind of news, and maybe there's a way for people to profit from that. Next up, we have Bed Bath & Beyond. So what are you doing when you're in your house? It's a pandemic, people are sitting at home in their pajamas, and they're kind of like, my house seems kind of dull. I want to spice it up a little bit. So they want to get little knickknacks that go around their house and everything. And it turns out that to do that, they were going online and ordering the items from Bed Bath & Beyond, which they can either order online and have it delivered right to their house and put it on, their dresser. They can have their nice knickknack on their bookcase, or they can order it and pick it up in the store, in the retail outlet, which Bed Bath & Beyond has kind of restructured to be able to do that. And the thing here is they just reported their earnings. And it's one of the few retailers that actually recorded a profit, and the profit was 50 cents a share. The original expectation, though, was a loss of 23 cents a share. So you have them turning a profit, and you have basically the CEO of the company coming out and saying that they kind of restructured now. They're really changing to this new environment, and they feel like they're in a much better financial position. So digital sales made up 89% of those sales in the quarter. So you could see, just like all these other companies that are reporting, how digital sales have just taken over everything. The interesting thing with Bed Bath & Beyond is that they were restructuring before this, closing, I think it was around 200 stores or so, and everybody thought that they were going to be having a prolonged period of trouble. And for them to do this surprise quarter was pretty good news. So we'll end on that. We'll end on the good news here for Bed Bath & Beyond. But I like to see how different businesses react to this environment. You can see how the landscape is changing. And if it's not the coronavirus or COVID-19, it's something else. There's always something that's going on that is kind of changing the way we're interacting with each other and with the environment, with the economy, with markets, with prices. And that is why this stuff is so interesting. So make sure you tune in next week and I'll go over the business news. Thanks for watching.